it's not just silver. Industrial and base metals globally at all the different major hubs are all at their lowest levels, combined lowest levels that we've seen in over a decade, if not forever. Copper and zinc and nickel and lead and aluminum and silver. And so, and again, not just in New York or London, but in Shanghai and some of the other major centers as well. So this is going to be a big story in 2023.
This is Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for November 15th through 22nd, 2022, while supplies last. This week we have a Queen Elizabeth special, 2 coins bearing the portrait of the late monarch. First, we have a silver Britannia at only $8 over spot. While the Royal Mint has already started minting King Charles commemorative coins, they made the unexpected decision that this first run of 2023 Britannia would still have the portrait of Queen Elizabeth II. Our second special this week is silver maples. We secured a shipment of backdated silver maples, including full mint-sealed monster boxes from years prior to 2022, and they are available at $8 over spot as well. The silver maple, made by the Royal Canadian Mint, is 4/9 fine and was the first bullion coin minted to that exemplary purity. They are one of the most recognized bullion coins in the world. Both our specials this week, the Silver Britannia and the Silver Maple, are $8 over spot while supplies last. They come in tubes of 25 and boxes of 500 and are IRA eligible. If you'd like to learn more about a precious metals IRA, call us, and we'll be happy to help you in that process. Our number for all orders is 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Craig Hemke from TF Metals Report. Craig, thank you so much for joining us today.
Elijah, it's always a pleasure, my friend. You're looking well. Happy Thanksgiving, happy holidays, Merry Christmas, all that stuff.
Definitely happy Thanksgiving. Merry Christmas to you too as well. Now, I'd like to discuss the precious metal markets first. We've seen quite a rally in the last couple of weeks, so definitely good news for those invested in precious metals here. Do you think this is going to continue? I know we've seen this alongside a falling dollar, so maybe we have a pullback coming. But what is your take on what we're going to be seeing in the near future?
Well, it's the fourth short squeeze of the speculators on COMEX. Really in the past 90 days. And I'm frustrated because I didn't catch a single one. And they've been dynamic. This most recent one, probably the most frustrating that I missed because we're heading into the December contract expirations. And a lot of that large spec and hedge fund short position in COMEX Silver was in the December contract. Well, it's not like they've got metal they can deliver. And so, I guess it was predictable that they'd have to cover, and then here they got squeezed. It was $3.10 or $3.20 in about 6 days. It was a dramatic short squeeze, and it's, like I said, the fourth one that we've had. So it's now run its course, but the best part about it, that's usually how these things turn. Elijah, I know we've talked in the past, and precious metals investors know this. A lot of times you take the stair steps up, and then the escalator or the elevator down, right? And that's where you're getting hedge funds and speculators kind of accumulating long contracts, and they all rush to liquidate at the same time. Same thing has happened in reverse now over the last 6 months. The hedge funds and the speculators have gotten short and short, and there have been these periods where they all rush to cover, and you get spikes. It's just the same thing in reverse. Now, the good news is we have now put on another higher high. Price has gotten above 21 and even gotten above 22. So I am optimistic and have been optimistic for quite a few months that things have turned, that the lows were in. Silver, lead, gold, and the mining shares down beginning in April and May. The bottom fell out of silver faster than gold. And so the thinking on my side has been for about the last 6-8 weeks that silver would stabilize and lead things back up, and that appears to be what's happening.
It definitely does seem like that's what is happening. We've seen such a dramatic move, and this is coinciding with a huge decrease in physical supply on the registered category for the LBMA and COMEX. Your perspective on that, and do you have any updates on the extremely low levels we're seeing on both those exchanges?
Well, a couple of things. One, it's not just silver. Industrial and base metals globally at all the different major hubs are all at their lowest levels, combined lowest levels that we've seen in over a decade, if not forever. Copper and zinc and nickel and lead and aluminum and silver. And so, and again, not just in New York or London, but in Shanghai and some of the other major centers as well. So this is going to be a big story in 2023. And we've recently seen some news out of the Silver Institute, which is not necessarily my favorite research group, but nonetheless, even they've come out projecting a massive, something like 150 million ounce supply deficit for silver next year. And that's even not just mine supply, that's taking in recycling and also factoring in kind of stable investment demand. I mean, that's 150 million ounces just based on some very conservative assumptions of demand for investment and industrial use. So this drawdown in silver that you're seeing is reflective of that. The LBMA vaults, they go down 5% in September alone. And if you strip out the amount of silver held in the LBMA vaults, allegedly for the big ETFs like the SLV, then what they have left is maybe 350 million ounces. It's not very much. And then obviously there are some people on Twitter that follow the drawdowns in COMEX. Now, again, the COMEX absolute levels are still about twice what they were 5 or 6 years ago. But in terms of what's called registered, which is readily available to be delivered, has a warrant attached, all that kind of stuff, that's back down to the levels we haven't seen since 2016. So there's a lot going on in physical metal, not just silver. And that's going to be an important piece of the puzzle as the calendar flips into next year.
It is definitely a different story with respect to the story for physical silver. Now, 1,000-ounce bars are still relatively low premiums right now. But if you look at Silver Eagles, the interesting thing is here at Miles Franklin, we're now actually able to sell pre-order for 2023 Eagles. But the premiums are still extremely high. So they're, 15, 16 over spot. Silver Eagles had been as high as, I believe, around 18 over spot. So they've come down probably a couple bucks here, but they're still, pretty much the highest we've ever seen them. So your perspective on how even on the new year for Silver Eagles, it seems like based on that pricing there, it seems like we're still going to see not enough Silver Eagles coming out of the U.S. Mint.
Yeah, and as you referenced, even the premiums for 1,000-ounce bars or silver grain shot, whatever you want to call it, that has all been creeping up and is reflective of this demand, not just from, the mints and the blank, manufacturers, but I mean, look at people that make solar panels and all sorts of other electronics going to need that silver and don't want to take any chances of having, some type of supply chain constraint by not being able to get their hands on it. 1,000-ounce bars aren't as high as what we're seeing for Eagles or bars or, rounds or whatever. But, there's a difference between the two. You still got to have the middleman in there that gets his hands on a 1,000-ounce bar and is able to melt them down or whatever they do, turn them into blanks, and then ship the blanks off to the U.S. Mint or the, Royal Canadian Mint or wherever, to create the actual Eagles or assorted other rounds. And so that shortage of Eagles will probably persist and people want those. And that's what drives that premium. It's not that, and I'm sure you could talk to Andy about this. I mean, it's not like Andy's buying them at $22 and selling them at $37 and making a $15 profit. No, he can't buy them for anything less than $34 or $5. And so there's a shortage of them. And anytime you have a shortage, that's when you get the premium. I mean, there's great value, relatively speaking, in just, regular, Buffalo rounds and, and kind of generic bars and things like that. There's probably I don't know if you want to call it an arbitrage opportunity, but if, someone was really aggressive about it, they could probably sell their Eagles at a price up in the 30s and then turn around and buy, 25% more silver by buying more generic stuff. But that notwithstanding, it's reflective of a shortage of silver at both the wholesale and retail level that you can't take those bars or the shot and create enough rounds that then the rounds can be shipped to the mints and then enough supply created to meet demand. And that's where the premium comes from. And that's probably why the premium isn't going away.
It definitely isn't going away. And as you mentioned, there is that arbitrage opportunity. A lot of clients have actually done that, where they sell us back Eagles at very high premiums and then, get more silver by going to 1,000-ounce bars or rounds, or just smaller bars as well. But where do you think this is leading? Because if the shortage just gets worse, then it seems like premiums just have to go higher from here. Your perspective on that?
Well, this gets back to what actually drives price. Okay, is it physical supply and demand, or is it the supply and the demand of that digital derivative, the futures contract? What we just talked about earlier about the short squeeze. Did suddenly the fundamental situation for silver change in the last 2 weeks? Did it change in the last 2 months or the last 2 years? But in the last 2 weeks, price rockets higher by 15%. Is that driven by fundamentals, or is that driven by a massive short position in the futures market? So there does have to be physical delivery at that price that's derived by the trading of the derivatives. You can't have all of this physical demand and physical prices that are north of $30 and a paper price that's down closer to 20. That bifurcation of that market casts a massive shadow of illegitimacy on it and draws attention to the illegitimacy of it that isn't necessarily desired by those that profit from those markets. So eventually that physical demand flows through and impacts the paper price. And now you couple that with what's going to happen next year. And again, I want to I've done a couple interviews this week, and I have prefaced this every single time because I myself am sensitive to it. I don't want to have people come off and the trolls in the comments say, "Oh, okay, wait for next year. I've been waiting for next year now for 12 years and blah, blah." Look, you'll recall, Elijah, we talked about my annual forecast that comes out every January. We talked about it a lot earlier this year. And I had figured that in 2018, the Fed was forced to pivot when the 10-year note got to 3.25 and the stock market fell 20%. And I figured, well, by summertime, that'll happen and the Fed will be forced to pivot and we'll be rolling by the end of the year. Well, what has happened? Well, we blew right through 3.25% of the 10-year, went to 440. And the stock market is still down close to 20%, but at one point it's down like 25, 28%. And the Fed hasn't pivoted. So my error is just kind of thinking they'd move a little more quickly than they have, but they will. I mean, the economic slowdown signs are overwhelming. If you want to know for sure where it's going, the yield spread between the 2-year note and the 10-year note in the U.S. is inverted by 68 basis points. The most steep and steeply inverted it's been since 1979. And I'm been around long enough. I was 13 in 1979 to remember there was a terrible recession that followed from 80 to 82. So the Fed is over tightened. They will recognize that next year, just like they were slow to recognize that inflation wasn't transitory and acted too late. They'll be slow to act as they have been. They'll start cutting rates next year. Nominal yields will fall. Inflation expectations will remain sticky. We'll go to negative real rates again. You add on all of this physical shortage stuff, and we're going to have a pretty good year. I'm confident of that.
I guess, actually, if we could turn now to the economy, as you mentioned, because of the inversion of the yield curve, it does seem like what I'm hearing is that every time we see that kind of inversion, we have a recession, and it's been very, very consistent. Could you expand on the inversion that we're seeing right now and what it pertains for the future?
Well, it depends. A lot of people measure the yield curve in different segments. What's always been very popular is just the spread between the 2-year note and the 10-year note. And that's what I mentioned earlier. That's about 65, 68 basis points. And what I mean by that is, what's a 2-year note? 440, something like that, 445. But the 10-year note's at 380. That negative is 65 basis points. And when that inverts, it's a sign that you're going to get a recession. And I guess I can explain the practicality of that, and I will in a second. Some people want to look further, and they want to say, no, let's look even shorter. Let's look at like the 3-month T-bill to the 10-year note. Well, that's inverted too by about 50 basis points. Even this morning, as we record this, Elijah, the 3-month T-bill will yielding even higher than the 30-year long bond. Okay, so the whole curve is inverted. Why that is a precursor for recession is what ultimately then happens. Economic activity slows because of that, because why invest in business or anything else on the long term when you can get, 4% for a year? Why invest in real estate? Why, when you can earn 4% essentially risk-free for a year? And so economic activity slows. A recession then kind of almost follows as like an unintended natural consequence. It just naturally happens. And then what happens? The central banks start to cut. And so the rate starts coming down. Investors in treasuries, longer-term treasuries, start to buy them aggressively because they see the recession. They figure inflation is going away. And all of a sudden, 3.5% looks pretty good if they think inflation is going to come back down to 2%. And all of this is because you get into that eventual recession. It becomes kind of a self-fulfilling cycle, if you will. I think that's maybe what I was looking for earlier. So having the full curve inverted again. So you can't just cherry pick and say, well, the 2s and 10s are inverted, but the 3-month to 10 is not. No, the full thing is a sign of where we're headed. And then you look at the other data. Like yesterday, we had the Philly Fed Manufacturing Index that is down near -20. The lowest it's ever been, and lowest since the last time we were headed into recession. We've seen home sales have absolutely plummeted, which, duh. I mean, the mortgage has gone from 3% to 7% in the last 18 months. Of course, home sales have plummeted. And the whole thing, like I said, just kind of becomes self-fulfilling. And so the Fed, which waited too long, because remember, a year ago, they were still talking about no rate hikes until 2023. They waited too long to start hiking, and now they're waiting too long to get off the brakes and start easing again. And it's going to cause this kind of stagflationary recession that we're already into. And that'll be then the forward-looking markets will begin to figure that out. Maybe that's what's already happening in the precious metals.
Now, one of the things that we did see just out this week is the introduction of the digital dollar. And it seems like, as you're mentioning, the Fed needs to reverse. And it seems like what the Fed is doing is they already have some control over the economy, but they're losing control, right? And it seems like the digital dollar ultimately would allow the Federal Reserve to have even more control over the monetary system and the economy. Your perspective on how the digital dollar may play into all of this?
Well, I tell you, Elijah, it's a long-term process, but this is something that I've been discussing. I'm sure you and I have discussed this multiple times over the last 4, 5, 6, 7 years. And they always kind of fell under that title, the war on cash. And again, why is there a war on cash? Remember, cash still gets referred to, it's just useless, and the only people that use $100 bills are, drug dealers and bookies and stuff like that. We just eliminate currency. It's so much easier, just throw your card, or get a chip implanted in your hand. Or the problem with that is when you eliminate hard currency and you have just simply nothing but zeros and ones, you really do open yourself to being subjective or subject to the state. I mean, look what happened in Canada last year, right? I mean, they regular people, truckers, regular, blue collar people were opposing these ridiculous mask mandates that were stopping them from doing business. And if you oppose the government, you got kicked off the banking system. They doxed you. They went out and froze your accounts because you weren't in line. You weren't playing ball. You weren't going along with what the government said. It had to be orthodox. This war on cash, that's what it's about. To keep, in the end, to make sure you can't protest. Because, look at what China's doing right now, where you got to hold up your phone, with the little QR code so you can go into the supermarket. Okay, all of these pieces, though, from the distance, they look like maybe they're not related, and it's just going to give them ease to be able to do this and that. I've always been concerned that it's instead a massive, overwhelming threat to your personal liberty and freedom. And this is something we've really got to stand diligently against.
I think that's a very good point there, is that it does really encroach against your liberty there. And one way to take back your sovereignty, take back your liberty, is owning physical precious metals, which is really all what TF Metals Report is about, tracking all of that. Can you share with our viewers how they can find you?
Well, I appreciate that, Elijah. My site's a couple things. One, it's an online, really vibrant community where we talk about this stuff every day. But we do focus on the precious metals. The last 6 or 7 months, maybe not quite as much, because it's just been no fun watching things go down day after day. But I think where people can use the content that I provide every day is, maybe kind of time their purchases a little bit. I bought, I got to think, maybe 300 ounces of silver in the last 90 days, at least 200. I can't remember. If you widen it out to 120 days, then it's at least 300. And why? Because I was watching price go down. Every time it go down toward below 19, toward 18, I'd buy some more. Because you could look at the chart and you could say, going 18 had been resistance for 7 years. So why wasn't 18 going to be support? And you look at the chart now and it clearly was. And so you can use some market analysis to time your physical purchases too. And if I can save you $1 on a roll of 20, rounds or eagles, that's $20. And, the site's only 15 a month. So we've been at it for 12 years, Elijah. Heck, I've known you for 9 of those 12. Where's the time go? And we're not going anywhere. I encourage everybody to check us out. I think I'm really proud of what we've built there.
Fantastic. Craig, once again, thank you so much for your time, and God bless.
Always good to see you, my friend. Happy Thanksgiving.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.